Hello friends, welcome to my YouTube channel, and today I am going to talk about the 5 best stocks to buy from the mid and small cap segment after the recent fall. So let's get started. First of all, a disclaimer that this is not a stock recommendation but my analysis, and this is only an individual analysis, and this is all my personal view, and anyone taking a position into stocks should do their own due diligence and analysis. First stock that I want to talk about, and everybody knows about it because of its golden run in 2017, Avanti Feeds. It is a leader in the fisheries and aquaculture segment, exporting to more than 25 countries around the world, with its major export being US. And that was the major reason for why the stock fell and started falling in October 2017. Later on, we came to know that the United States government has increased the tax by 6-fold on fishery products, or you can say fish feeds being exported to United States. So that was one of the reasons for the fall, and then we saw from January onwards all mid and small cap stocks were painted by the same brush, and the stock fell appreciably. Today it has fallen more than 50%, and I feel it is at a very attractive level. It has one of the highest return ratios, currently trading at 11 times FY19 earnings, with a very high ROE of more than 25%. It is still one of the best stocks to buy in the market at the moment. The second stock I want to talk about is Century Plyboards, a leader in its niche segments, and currently you could say it is one of the retail companies with the housing boom that is taking place around the second and third tier cities. One of the preferred brands of people for wooden equipments and wooden things is Century Plyboard. So it is a home improvement play at the moment. It has one of the highest ROEs compared to its peers, an ROE of 26% and a net profit margin of 10%. It is a direct relation with the government scheme of bringing in homes for everyone across India by 2022. So the visibility of growth can be seen by the fact that there is extreme urbanization that is taking place in India. The valuations has come to very attractive levels. It has fallen more than 40-45% from its peak of January. The next stock I want to talk about is Blue Star, a leader in the AC segment. Perhaps it is currently having one of the biggest market share of any consumer goods company in India, and everybody would agree that currently the AC penetration across the nation is extremely less. In fact, a Forbes report says that the AC penetration is less than or closer to 5% at the moment, which is extremely low for a country like India. Hence, the next 5-7 years could be big for such a company, with the AC becoming a necessity rather than a luxury. Currently, as we have heard, the GST rates on equipment such as ACs and washing machines has come down appreciably, and that would help the growth or foster growth in such a segment. Positive geographical conditions. Now, what I mean by that is that what has happened over the last 2 decades is the average temperature across the world has increased appreciably, be it Europe, US or Asia, and that has correlated with the seasonal changes that has taken place in India. So you have a summer months going from, in some of the states here in India, from February all the way to October, November. Hence, the growth rate could appreciate considerably considering the weather conditions that is prevailing at the moment. Also, there is increase in discretionary income with people finding better jobs abroad as well as in India. They are looking to move away from having fans or coolers at their homes towards ACs, and there are only 3 or 4 major players in the segment. Hence, it is a very big play on urban consumption. Another stock that you could look at is VGUARD. Again, a direct play on the housing boom that is taking place. It has an ROE, a return on equity of 18%, a return on capital employed of 14%, and an operating profit margin of 8%, which is best in class in its segment and in its industry. Apart from providing stabilizers or wires, VGUARD has now diversified into different product lines such as fans as well as microwaves, and hence there is tremendous growth that we foresee in this segment at the moment. It is at an attractive valuations following the crash that has taken place in the mid and small cap. Currently, the stock is trading around 195, 190 after having a high of 250, 260, and perhaps it can easily give 30-35% in the next 1 year or so. The last but not the least of the stocks, and this people might say is a controversial bet because it is perhaps slightly unknown compared to the other stocks that I have talked about. BHARAT Seats. It is the largest supplier to Maruti. So Maruti Suzuki is its biggest client at the moment, and the demand pickup in the auto segment is going to be huge over the next decade. As I mentioned in my last presentation that I uploaded, that autos would be one of the biggest movers in the market over the next 8-10 years, with people shifting from say scooties or proper scooters or bikes onto cars. I think automobile sector or four-wheelers would do really well, and Bharat Seats provide the seating equipment and the gears for the Maruti Suzuki. It has a very high return ratio. It has a return on equity of 20% and an ROCE of 16%. With a market cap of under 600 crores, it is perhaps a slightly risky bet, but a very good bet over the next couple of years to provide extremely good return for the investors. Currently at very attractive levels of 17 times current year earnings. So the FY18 earnings, it is trading at 17 times. So this was my video on what are the 5 best stocks to look at after the current small cap carnage that we have seen of around 22-23%. You can buy in tranches of 20-25%. Put in your money at 20-25%, and hopefully you're going to get better returns going forward. Please like and subscribe my channel. Thanks for watching.